Hi, it's Tom Mitchell, just here with Marilyn Batt from Dominion Lending, and we're here to talk to Marilyn about some of the upcoming changes that the government's proposed or will be having changed in the mortgaging and how it affects the consumer. Marilyn, what do you think about what's happening and what are some of those changes that are taking place?
Hi Tom. Well, on March 18th, the maximum amortization period will fall from 35 years to 30 years. So a purchaser qualified to purchase for $400,000 for 35-year amortization will now drop to $368,000 purchase price based on the 30-year amortization. So that's a drop in the purchase price of $32,000. Also, existing homeowners will only be able to refinance their homes up to a maximum of 85% loan to value rather than 90% loan to value.
So those changes, while they're significant, I'm sure the government's doing it to help get a little bit more control on the lending rules and policies. They don't seem that harsh or that detrimental based on what they used to be 6 or 7 years ago.
No, I agree. I think that the changes will actually be for the betterment of all clients.
And at the end of the day, it's going to force them to be a little bit more savvy with their money, so they're increasing their mortgage and getting more equity in their home anyway, so that's not a bad thing. A lot of people are wondering, what are their options coming up with a down payment? Whether it be for their own home or investment income and property. Is there anything that you would suggest or recommend?
Well, one option is that some lenders do offer a cashback mortgage. The rate is a little bit higher, but some of those lenders do allow that cashback to be used as part of the down payment. So that would help potential purchasers who haven't saved up quite enough. Now, they would still have to have saved enough for their closing costs from their own resources. Now, on investment property, you have to have a minimum of 20% as your down payment, and you cannot use a cashback towards that. However, if those people have other properties that they own, they can use the existing equity in those properties to be put towards their down payment.
Great. What are the different rates that you folks are able to get to be more competitive in the marketplace?
Well, we are connected to over 35 different lenders who keep us up to date on a daily basis on their rates. So our rates are very competitive, and we can hold the rate for 120 days. So a purchaser looking for a new property can find that new property and still close within that 4-month period of time. We also have a large volume with the lenders based on our team, and we are offering promotions from time to time that are offered to us by the lenders. It could be a quick close rate that's a little bit less than usual. It could be a free appraisal or perhaps help towards their legal fees, and we pass those along to our borrowers. So there are advantages to using our team.
I can tell you personally, these folks have done a great job for us over the last 20 years, and you know, we've seen them get better deals for clients that actually deal with the same institution and end up getting the mortgaging with. So it's kind of funny how that works out. But listen, Marilyn, I'd like to thank you very much for coming in and talking to us today and give us an update on what's happening in the mortgage world.
Thanks, Tom. It was a pleasure.
Okay, thank you.